make it easier for users to switch, or by, let's say, once somebody buys an expensive smartwatch, making it so that smartwatch isn't really going to work with a non-Apple iPhone. And so you've bought the watch, you're going to hang on to the iPhone, and you're not going to switch. Things like that. They lay out a couple different examples of the ways that Apple has sort of degraded different technologies or prevented technologies from being on the phone that would keep people in its own ecosystem.
Critics to the suit might say, well, wait a second. Apple's just making sure that the Apple ecosystem is as user-friendly as possible, and the products work best when working with other Apple products. Let's set that aside for 1 second, Jen, and get into the idea. What's the Justice Department and what are the attorneys general looking for in this suit?
Well, they haven't asked really outright for any kind of a structural remedy as they have in their lawsuits against Google. They are asking for injunctive relief, not fees. That's not usually what happens in monopolization suits, but injunctive relief that really would crack open Apple's walled garden. They're really asking for an order that Apple provides more interoperability with some of these other technologies that would be beneficial, according to the DOJ, for users.
All right. When you look at a case like this, I feel like big tech has certainly been under regulators and certainly the U.S. Justice Department's radar over the last couple of decades, since that big tech has kind of rose to play such a big role in our society and has increasingly had a lot more power, if you will, in terms of what we are all doing. So how do you kind of legally game this out? Is it going to be a long court process? Does it feel like the justice has a stronger case? Does Apple have a good kind of rebuttal to it? How do you game it out?
I think this is a difficult case for the Department of Justice, just at least right now. I mean, let's first start with what you just said. This is going to be a really long process. I mean, 3 years, I think, at the least, before you have at least a district court decision. The whole market could change with generative AI and all the different new technologies that are emerging. The market could be quite different by the time a decision needs to be made. So that's one thing. The second thing is that the DOJ really tries to align this with a case in which it was successful against Microsoft in the 1990s. But there are kind of some big differences, because at that time, Microsoft's monopoly over the operating system was really solid. And here you have Android, and you can't say that Android's not a significant competitor. And I think that there are some weaknesses in the way they've defined the market. To say that there's this segment of smartphones allows them to say that in the US, Apple has a 75% market share. And they kind of have to do that in order to establish monopoly power. And I'm not really sure that that's a market definition that would hold up. And the last thing I want to say goes back to something Tim just said, in that it's very difficult to prove monopolization where a company has legitimate pro-competitive business justifications for its conduct. Now, here the DOJ says that Apple's justifications, more efficient use, privacy, security, seamless operation of Apple products are pretexts. Right, that the documents and the testimony won't bear that out. But, we've already seen in another case against Apple by Epic Games, a lot of that evidence fleshed out. And a judge in that case decided that Apple did have pro-competitive justifications for its walled garden. And a lot of the same evidence will be put on trial here. So I think that there are weaknesses. And it remains to be seen, what the evidence really says. Of course, the DOJ takes excerpts from documents that look bad for Apple, but you need to see the totality of the facts and the totality of the evidence to really understand the intent and motivation behind some of the conduct that's outlined here.
Hey, Jennifer, I do want to just read Apple's statement that they sent to Bloomberg News that actually addresses some of what you just talked about. Quote, "At Apple, we innovate every day to make technology people love, designing products that work seamlessly together, protecting people's privacy and security, and create a magical experience for users. This lawsuit threatens who we are and the principles that set Apple products apart in fiercely competitive markets." As you mentioned, Jen, there have been other lawsuits in the past few years, specifically about Apple's App Store and the case at Apple's App Store. To what extent can we draw a line from that lawsuit and what's happened since then to what we learned today from the Justice Department and the Attorneys General?
So some of the Some of the differences here, the Epic Games against Apple lawsuit was quite different. The markets alleged were different, and the main failure in that suit by the plaintiffs was really in the way they defined the market. This market is defined differently, I think on purpose because of the failure in that lawsuit. And it stands a bit on more solid ground. But, the very interesting thing when I saw Apple's statement and what it made me think about is the judge in that Epic case who said, look, what you're asking for, Epic, is to make Apple iOS just like Android. Because Android is more open. It is less of a walled garden. And people sometimes choose Apple because they want that choice. They want the more closed off choice that they believe provides more privacy and more security. And if you force Apple to open up, you're really removing choice. Rather than giving users more choice. And, I think about that. And that's one way to look at this situation and one way a judge might look at this situation. So really, it sort of goes both ways, the walled garden versus the non-walled garden.
Bottom line, I'm thinking our investing audience that's listening here on Bloomberg, on TV, radio, YouTube, on streaming, across our platforms. So we're watching Apple shares, they're down. We know it's been a very different tone of trade, though, for Apple this year. We've seen that stock really pull off its highs, if you will. Having said that, you say difficult for justice, a case that could be 3 years, and then in 3 years, who knows where we are. So what do you think should be top of mind for investors, just quickly?
I think exactly that time will tell, and that there should be no conclusions drawn now. There can't be, and Apple has a good shot here.
All right, really appreciate it as always. Jen Rhee, she is our senior antitrust litigation analyst, unbelievable, here at Bloomberg Intelligence, joining us from New York City. All right, so watching Apple, we're also, of course, keeping an eye on shares of Reddit. They're up about 42%, Tim.
Yeah, shares of Reddit surging just in their first day of trading, pricing shares in an IPO at the top of marketed range. It's the second big tech listing in as many days. Our coverage of Reddit's IPO continues with Bloomberg News senior executive editor for global technology, Tom Giles, who's in our DC bureau this afternoon, along with Ryan Gould, U.S. IPO and deals reporter at Bloomberg News here in our New York studio. Hey, Tom, I do want to start with you, just wrapping up the conversation that we just had with Jen with Apple. To what extent do you think this is a threat to Apple as we know it, Apple's identity as it sees itself as this walled garden, this ecosystem that works seamlessly with other Apple products?
That is a big selling point for them, and I think you see it every day when you use their products. They're going to probably have to make some changes in the way they do things, the way you interface with their services on the iPhone and other devices. I think they're going to throw some remedies at the Justice Department and try to work things out, try to reach a settlement. As was noted in the earlier conversation, this is going to take years to play out. I think the bigger thing that Apple needs to be thinking about is what is that next big product. And will the Vision Pro take off? I think those are the bigger existential questions facing Apple at the moment. This one, I have a feeling they're going to find ways to get to remedy it without changing their fundamental identity.
All right. Hey, speaking of existential questions, how are you, Tom Giles? Someone who has seen many tech cycles, understands the ups and downs of this industry, the changes that we see. Reddit, it's been around for almost 20 years, 18 years or so. Social media player. How are you thinking about its existence in today's environment and as a business going forward?
Yeah, it's been a long time since we saw a company, consumer internet company sell shares to the public. There was a lot of pent-up demand, I think. In this one, there's going to be conversations around whether the investment bankers left a little money on the table with the pricing of those shares. Look, it's popular. It's got a really loyal, a rabidly loyal fan base, also a fan base that's, or user base, that's liable to turn on it as well. Right now, it looks like things are going in their favor, and I think the other thing that people are looking at with regard to Reddit is not just the advertising business model, but this idea of them licensing their data to makers of large language models to train them and to make them better. Tools like ChatGPT, you can use the conversations and the original content that is created on Reddit to make your large language models more comprehensive, smarter, more in touch with what people are thinking and doing and posting, and Reddit wants to make a big business out of that. And I think that's part of what might be driving the stock today.
Well, speaking of the stock, I do want to bring in Ryan Gould, U.S. IPO and deals reporter here at Bloomberg News. He's in our New York studio right now. So Ryan, talk a little bit about this IPO, because shares were sold at the top end of the marketed range, $34 yesterday. Bankers on a day like today, pretty happy with the way things are going?
For sure, Tim. I think this is a moment that the IPO market writ large has been waiting for probably the best part of 2 years, because we've had 2 tech IPOs in a week, both of which have either traded at the top of the range or above the range, and both of which have since gone on to trade, substantially higher. If you look at Astera Labs, which just, a couple of days ago priced in New York, this is really an IPO that has it all, right? It has AI, it's chips,
So true.
it's everything you could want as a
check.
banker. And, to their credit, Morgan Stanley was the lead left on both Reddit and Astera Labs. I think, Morgan Stanley, hats off, looks to have done a pretty good job, you could say, with both of these offerings. Now, obviously, there's a lot still to be done when it comes to Reddit.
Were they hankering to get this out, though, already? For Reddit, in particular, 2 years in the making?
I think so, but I think you also have to put it on the shoulders of the company as well, because, in your Reddit, I think Jen Wong, the COO, was on BTV this morning talking about, how this has been 2 years in the making. And I think for a company like Reddit, you just need to be able to push past it. It's a milestone. She said it was a wedding day for the company. And, you can go on and be a married couple, hopefully for many years after the wedding day. But I think that the point being that they've spent so long in the quagmire of the uncertainty around tech, around IPOs, around what markets mean. And now you have the point that, okay, we've done it. We've crossed the line. The Rubicon is behind us.
But as we know, the honeymoon can be over really quickly in any relationship. Reddit shares still up 45%, $49 and change. Tom Giles, come on back in here. It's something we talked about in our last hour. Being a publicly held company brings certain demands with it and a lot more scrutiny. So it's a tougher, I understand the AI play and the data play makes sense, but it's a different environment for Reddit versus being private.
Yeah, exactly. You have investors looking for near-term returns. When the user base gets angry about something and walks out, blacks out certain channels, those things will, users or investors will be paying much more closer attention to things like that, hiccups along those lines. At the same time, Reddit, it's really incumbent on Reddit to demonstrate that these new business models like licensing your data will be able to generate money over the long haul, not just in the near term. How many different LLMs are going to need to license Reddit's data? Is that really sustainable over the long haul? It's a question that I don't know the answer to. It's a question we are asking. The other thing that they've got to do is they want to make money from services sold between users.
Right.
So one user sells a service to another, and Reddit keeps a cut of that. We know less about that business. I think that's less well developed than the other two, but they're going to have to continue to roll out things like that in order to keep investors, and in order to keep that revenue coming in,
right,
and keeping investors happy.
Hey, Ryan, I want to give you the last word in the 30 seconds that we have left here. Did they price the IPO too low, do you think?
My view, I don't think so. I think it was a moment to be cautious. Markets are markets, right? Like, you would have to have a crystal ball to actually realize if Reddit was going to go up or down today. The big swing factor being the retail component.
Right.
It looks as though that's working in their favor.
8%, right, of Reddit users got
exactly
to access
8% of shares to the directed share program went towards Redditors.
All right, fascinating. Stock still up 42%. Guys, thank you so much. Ryan Gould, U.S. IPO and Deals reporter here in studio. Tom Giles, Senior Executive Editor for Global Technology, both at Bloomberg News. Reddit right now, $48 and change. This is Bloomberg Business Week.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ all advancing right now. The relentless rally in stocks powering ahead on this Thursday. On optimism, the Fed will be able to engineer a soft landing, which would bolster the outlook for corporate earnings. So here's where we stand. S&P right now up by 0.5%, higher now by 25 points. The Dow up 331, up 0.8%. NASDAQ up 68. That is a gain for NASDAQ of 0.4%. 10-year at 4.27%, with a 2-year right now 4.62%. Spot gold down $5.50 the ounce to $21.80, a drop of 0.3%. West Texas Intermediate crude down 0.3%, 81.02 for a barrel of WTI. Bitcoin right now down 2.6%, 65,304 on Bitcoin. First day out for Reddit. Shares up now by 43%. Apple down 4.2%. The Justice Department and 16 attorneys general are suing Apple, accusing the iPhone maker of violating antitrust laws. Apple says that lawsuit is, quote, wrong on the facts and wrong on the law. Recapping, stocks higher. S&P right now up 24, up 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, love this story. Of course, it's about a company we talk or have talked about a lot for years. Today, though, in a different way, if you will. We're talking about the once iconic General Electric. Used to kick off our earnings season, whose CEO at one point, Jack Welch, was revered the benchmark for corporate America, and whose mix of businesses was always seen as a great read on the U.S. economy, Tim, because they had their hands in so many different things.
Well, that iconic General Electric, is no more. Well, at least it's a very different company. And it's today's big take. It's also the cover of the current issue of Bloomberg Businessweek, which you can buy right now on newsstands and also read on the Bloomberg terminal and at bloomberg.com/businessweek, written by Bloomberg Opinion Industrials columnist and Boston bureau chief Brooke Sutherland, who has the inside story on how GE CEO Larry Culp dismantled a 131-year-old American giant. It's an empire divided. Brooke joining us right now from our Boston bureau. Brooke, congratulations to you and to Ryan on this story. The cover again of Bloomberg Businessweek. I want to go back to 2018 and perhaps even earlier in the history of General Electric. When Larry Culp became CEO of GE then, what did GE look like?
It was a bit of a mess, candidly, and I think, GE's own executives and board members are candid about that at this point in time looking back. But, the company was still too big and still too complicated, even though by that point it had divested much of that sprawl that Carol was talking about from those Jack Welch years. It just still had too much going on. And those businesses that it retained were not generating enough cash to pay off the enormous debts that GE had accumulated, to the point where, the company had to cut its dividend twice, actually. First under John Flannery, and then Larry Culp cut it again when he became CEO, down to basically a nominal penny per share.
It's amazing, right? Brooke, you've been covering this company for a long time. We've been talking about it with you for a long time, and it is interesting that a company where we used to think their financial business was just incredible, right? And how it became really, as you say in your story, like an albatross for this company in particular. Walk us through, though, Larry Culp being CEO and some of the really tough tasks that he had to do to make it, a viable mix of entities, if you will, going forward, and separate companies.
I think what made this turnaround so complicated is that it was not just one problem that Larry Culp had to fix. When he came in as CEO, there was so much attention to the debt for very good reason, because this was probably GE's most existential problem. And figuring out how to bring that down was Larry's number one task. And he did that in two different ways. One way was that he made some well-timed divestitures, most notably the sale of GE's biopharmaceutical assets to Danaher, which closed about 3 weeks after the pandemic started, and essentially brought air travel to a halt, creating an existential problem for that aerospace business. And then he also later sold GE's jet leasing business to AerCap. Those were the two biggest parts of his asset sale plays. But then what he also did, because you have to think about debt as a two-part question. From an investor standpoint, it's the absolute number of the debt, but then it's also how much money do your operations make? And that's where I think the real turnaround happened at GE, because Larry is just very meticulous about everything that happens on the factory floor, every single process, every single manufacturing line. And they really did, a full-scale assessment of their manufacturing operations to find every possible way that they could improve and eliminate waste. And I think what's really the most striking to me, though, is the culture change that's happened at GE, especially having covered this company for so long. There's a much greater sense of humility in the Larry Culp era, and a recognition that GE is not perfect, that it needs to be continuously improving and seeking out those sources of inefficiency.
Is it fair, Brooke, to draw the line back to Jack Welch from the culture that was shifted under Larry Culp? Was it a shift from the Jack Welch culture?
Well, remember that, Jeff Immelt was there for about 20 years, so he maybe had a role to play here as well. But I think, that what GE was sort of known for was this mentality that anybody with an MBA could run a business. And, in the Jack Welch era, you did have this mentality where he would sort of systematically cut the bottom 10% of the workforce. And it did feed into that mindset of, if you survived all of that, you were the smartest person in the room. And I think there's something very dangerous about that for any company, really, but especially for a manufacturer whose products go into many very important forms of infrastructure, not least of all airplanes.
It's also really impressive. You look at shares of GE, they are up almost 40% year to date, hitting another 52-week high today. I'm not sure if it's, I've got to look a little bit more perspective in terms of the overall trade, but nonetheless, a 52-week high, quite a rally this year. So the outperformance is impressive. And of course, it has to do, I'm sure, with all of the things that Larry Culp is doing. Having said that, when I think about GE, I had an uncle who worked at GE up in Connecticut. I mean, they used to make a lot of stuff. And is that kind of getting back to its roots?
I think think it is. It definitely is. I mean, to your point, it had its hands in everything, but it wasn't necessarily great at doing all of those different things. And I think what Larry has done is really focus the company on the things that it's good at. And so for the aerospace business, that means they're going to make jet engines, and they're going to make really good jet engines that perform well and get those airplanes where they need to go. In the case of GE Vernova, that's now an electric grid business, a gas turbine business, and a wind turbine business. And they've had some issues there, but they're working through them, and the business has become much more profitable and efficient. And GE Healthcare was already spun out, but that too is focused on what it's good at. I mean, I think it was really telling when Larry held the GE Aerospace Investor Day in early March. He said, we are not going to be all things to all people. Mm-hmm. That was certainly not the mindset for the GE of old.
There's this idea, Brooke, that bigger is better. And certainly that's how we saw GE go when it acquired so many businesses and built so many businesses for so many years. Now that it will, as of next month, be 3 distinct companies, how can it make sure that those 3 companies perform better as separate entities?
I think, we've sort of moved beyond the bigger is better, and actually I would say that focused is better. And so I think just sticking with that focus and really continuing to drill down into the manufacturing operations of these businesses is going to be crucial for GE. Now, part of what they have done is they've set up these businesses where they can think more strategically about acquisitions down the road. And so I do think that will be part of GE's go-forward strategy. Certainly on the healthcare side, acquisitions are a very important part of growth for that business. And in aerospace, they will have a lot more cash to play around with than they have had in the recent past. And so I think it'll be really interesting to see what GE does with that. What Larry Culp has said is that he's going to be strategic. He's going to look for complementary assets. He's not going to necessarily buy some sort of monster aerospace and defense giant out there. But there are ways in which, they could sort of push the aerospace portfolio perhaps past its current focus on jet engines and defense products.
Brooke, all day we've been talking about the Reddit CEO, and sometimes it's, being at the right place at the right time in terms of the right market environment or the right AI environment, which Reddit is certainly talking a lot about and how it can benefit. Having said that, that can be so true for a CEO. You mentioned Jeff Immelt, and I forget he was there for so long after Jack Welch. It was a difficult position to be in, coming in after Jack Welch. And you know this company better than I do.
NYMEX gasoline April futures settle at $2.72 a gallon. NYMEX diesel April futures settle at $2.66 a gallon. NYMEX WTI crude May futures settle at $81.07 a barrel. That's down 20 cents or 0.25%.
At the right time, because he was asked twice, right, to take over and take this top spot before he finally signed on.
Sure. I mean, I think
and NYMEX natural gas April futures settle at $1.68.
Really clear when he took on the role. Like I said, there was so much attention on the debt because there had to be. It was just a massive problem for GE. And then, of course, they had to figure out what was happening with their long-term care insurance business, where they had a $15 billion reserve shortfall. I mean, everything was sort of in free fall. And I think what maybe got missed in all the chaos and the noise of that is that there is an operational turnaround that also needs to happen. And if you're going to do an operational turnaround, there's probably no better guy to do it in industrials than Larry Culp.
But I love the quote in the story that when he got there, he said, the place was a mess.
It was, and I mean, there are little things that you wouldn't necessarily be able to appreciate from the outside, but for a manufacturing company, I mean, if you think about the distance in which a part travels across a plant floor, or, minor tweaks to the way that you do something, all of that adds up to, what the cash flow number looks like at the end of the quarter or the end of the year, and that's really what he's doing, is paying attention to those little things that add up over time.
Hey, Brooke, we're talking a lot about the recent history of GE, but this is a company that goes all the way back to the 1800s. Just remind everyone about the identity of this company and the legacy of this company and Thomas Edison.
Sure. I mean, it's really just an industrial icon. And, as we say in the story, it was a monument to American capitalism. It was created to commercialize Thomas Edison's light bulb and other electricity product inventions. And then it really got to the point where it, literally was swallowing entire industries. And, going back to Carol's comment at the beginning, it had its hand in everything. I mean, washing machines, credit cards, plastic resins. They owned NBC. They had a massive real estate lending business. They loaned planes components to airlines. They built jet engines. I mean, anything you can think of, GE probably was involved with at one point. One of my favorite examples is that they used to own a pretty sizable chunk of Dreyer's Grand Ice Cream back in the day. So, I mean, it just illustrates just the sheer scope of this company and just, how involved it is really in sort of building the life that we have in America.
All right. Good stuff as always. Brooke Sutherland, thank you so much. So appreciate it. The Big Take, the cover of Bloomberg Business Week, Bloomberg Opinion Industrials columnist, and Boston Bureau Chief Brooke Sutherland joining us on GE.
Okay, from New York to Boston to Washington, D.C. now for a check on the latest world and national news. For that, we go to Amy Morris in the Bloomberg 991 newsroom. Hey, Amy.
Hey, Tim, Congress has released details of that $1.2 trillion deal that would keep most government agencies open through the end of September. The clock's ticking, though. The deadline is midnight Friday. There still could be a short government shutdown this weekend as the bill heads toward a vote. The Biden administration continues to express concerns that if Israel invades Rafah in the Gaza Strip, it would cause many more civilian casualties when famine and disease are spreading. It does sound like Israel, though, will invade Rafah regardless of what they hear from the White House next week. That's when Israeli Strategic Affairs Minister Ron Dermer will be in D.C. He told a podcast that, quote, "We're going to go in and finish this job."
It's going to happen, and it will happen even if Israel is forced to fight alone.
Secretary of State Antony Blinken is in the region pushing for a deal between Israel and Hamas that would lead to a 6-week ceasefire and an exchange of hostages for Palestinian prisoners. The state of New York may be ready to seize Donald Trump's Westchester assets if he doesn't pay up. New York Attorney General Letitia James has said that she is prepared to start seizing Trump assets if he misses a March 25th deadline to post a bond for 120% of the state's $454 million judgment, just so he can put it on hold while he appeals. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
Do you see a future for Monumental as a public company?
Yeah, I think so. I think what we found is the leagues have opened up to new pools of capital. Over the last year or two, both the NBA and NHL have allowed professional investors to come in, not as individual owners, but as funds. So that's a whole new pool of capital that didn't exist before. Sort of shows a whole new asset class opening up for professional sports, not just teams, but professional sports enterprises.
I think the sophisticated analysts will be looking at this industry, and as our revenues start to get in the billions of dollars, yeah, I think that you'll see a wave of companies go public. Whether we will or not, there's a big responsibility when you're a public company. And I tell people, we're a public company already. The scrutiny that you're under in running a sports team is, I think, much higher than a public company CEO has to live with. We'd be prepared to do it, just the market would have to be right. We'd have to emotionally be ready to do something like that. But I think Monumental will be one of the 3, 4, 5 best-in-class organizations that if that time was there, sure, we could go public.
Of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Next time on The Deal.
Some people have businesses where they're in it to make money. Look, we all want to make money. But if that's your number one priority, if you're not passionate about it, then I think that's a red flag. So I always like to invest in people. I think that works in clubhouses and it works in businesses. It works in investments. So I tend to just lean towards the character and the passion of the people.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, they continue to power higher. The relentless rally in stocks powering ahead on optimism that the Fed will be able to engineer a soft landing, which would bolster the outlook for corporate earnings. Right to the numbers, S&P now up 1852.42, a gain of about 0.4%. We've got the Dow up 284 now, up 0.7%. The NASDAQ Composite Index up 35 points now, up by about 0.2%. 10-year 4.27% with a 2-year 4.62%. Spot gold down $4 the ounce to $2,182, a drop of 0.2%. West Texas Intermediate crude down 0.3%, 81.01 a barrel, and Bitcoin down now by 2.8%, 65,206. The Justice Department and 16 attorneys general are suing Apple, accusing the iPhone maker of violating antitrust laws by blocking rivals from accessing hardware and software features on its popular devices. Apple, meanwhile, says the lawsuit is wrong on the facts and on the law. First day of trading for Reddit, priced its IPO at $34 a share, right now at $46.20. For Reddit, that represents a gain right now of about 36%. Recapping, stocks higher, S&P right now up 20, a gain of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, episode 4 of the deal, episode 4. Shall we try that again? Take 2, everybody. Episode 4 of The Deal with Alex Rodriguez and Jason Kelly dropping tonight, featuring Yankees Hall of Famer Derek Jeter.
Jeter, of course, a teammate of Alex Rodriguez when they both played for the Yankees. It airs this evening at 9 p.m. Wall Street time on Bloomberg Originals. You can also catch it Friday at 7 p.m. on Bloomberg TV. And the podcast already available for download at Bloomberg.com or wherever you get your podcasts.
Bloomberg Originals chief correspondent Jason Kelly is joining us here in studio on the latest episode. This one, hello.
Hi.
This one just sounds like what a blast.
Yeah, this one, we definitely had our calendar
circled. Not that the other ones
here.
weren't, but this must have been fun.
This was fun, and, this is a pair that has a long history together, a long and somewhat complicated history. I think almost anyone would say if you Google Alex Rodriguez, Derek Jeter relationship, put aside some time.
So did you deal with this?
We did. We did talk about it. I mean, and... we didn't spend the whole time talking about it, I think much to some people's chagrin. We did talk a lot about business, and we'll get to that in a second. But, these are two guys who literally have known each other.
Brent crude futures settle at $85.78 a barrel. That's down 17 cents or 0.2%.
They came into the major leagues more or less together. They were very close friends, ultimately teammates here in New York. at a time when, things didn't go as well. And then they went really well because they won the World Series. In their post-playing days, they've sort of come back together, both on air and off air. They swap some investment advice. And in fact, let's take a listen to what their conversation, actually. Alex sort of tees up Derek to talk about how he approaches deals.
How do you think about investing? Does investing excite you? Are you someone that picks up the phone and calls a Michael or calls Passat or one of your friends? Do you share ideas? How do you think about investing when opportunities come your way? Because there's going to be viewers that are going to say, I would love to have my hero, Derek Jeter, invest in my company. I'm a young founder. How do you think about that? How do people approach you? How do they find you?
Yeah, I think one of the benefits and perks of playing in New York is you get a chance to meet a lot of people. I've met a lot of people throughout my careers. I still get a chance to meet a lot of people. The way I look at it, Alex, is I invest in people. You run into people all the time that have great ideas. Everyone has a great idea. Everyone has a business, going to be $1 billion business. But you have to invest in people, and you have to get to know them, and you have to know if they're passionate about what they're doing. Some people have businesses where they're in it to make money. Look, we all want to make money. But if that's your number one priority, if you're not passionate about it, then I think that's a red flag. So I always like to invest in people. I think that works for, works in clubhouses, and it works in businesses. It works in investments. So I tend to just lean towards the character and the passion of the people.
So there you have it. That's how you invest if you're the captain. I mean, first of all, it's like a handsome contest up there. I mean, incredible.
I was just going to say, were you like, first of all, what a cool, two people to have, three of you together. Like, there's just a moment where you're like, oh my God, like this is pretty cool stuff.
Well, and it's very rare, I have to say, for the two of them to sit down and have this sort of conversation. I mean, Alex said to me as we were prepping, he's like, this doesn't really happen. Like, we don't sit down together and have a long form conversation like this, certainly on air. It's one of the, Alex told me, I think it's only the second or third time they've ever really sat down together for this type of interview.
Are they in business together at all?
They're not in business together at this point. Who knows? Maybe they could be at some point. They've taken relatively different paths.
Yeah.
Derek went into baseball ownership and management originally. Alex
Marlins,
is now exactly with the Marlins, and Alex now obviously pursuing the basketball franchise.
So, but what about their business investments outside of those things? I mean, what do those end up looking like?
So Alex is very much, real estate heavy. Where they overlap is they do like early stage sort of venture style investing. Derek has invested. I've talked to him about this before on Bloomberg Television and radio about some collectibles businesses he's looked at. Both of them, I think, Derek especially, and this sort of tracks with their personalities, like sort of taking his time. He's got 4 young kids. He talked about that in the interview. He talked about not wanting to go back into ownership unless he was in control, which is part of what sort of went sideways a little bit when you look back to what happened with the Marlins. He was a minority owner and an executive, but wasn't really the person making the final decisions, and he talks about that. So, their philosophy, I think what's interesting is it's very much honed by their experience as ball players. And we've talked about this, the three of us before,
Makes sense, right?
Sort of what you take from that experience, and both of them, clearly applying that.
I think it's always interesting. I feel like when we talk to a lot of entrepreneurs, Jason, you know this, I know Tim knows it from some of the conversations we've had around this table, is that people always talk about it. It's like, yeah, I want to make money, but I really care about the people and the business they're creating and what they are about. That's what I ultimately will kind of make me say, I want to invest in this. It's the person.
Totally. And I thought, what we just heard from Jeter was really interesting because he has this perspective that candidly none of the rest of us have, or very few people have, which is learning about people in a clubhouse, in a locker room, on the field, under pressure. It's like we all face a certain amount of pressure in our jobs. Like you guys have high pressure jobs, but I dare say not like standing at home plate at Yankee Stadium, in front of 50,000 people with the World Series on the line.
Right.
Hey, you've had some pretty incredible guests on the show. Can you give us a preview of still what's to come?
Sure. Next week, I'm very excited because we have Hannah Storm coming on, a real pioneer.
Yeah.
We actually taped that in front of an audience up at the Village in Stamford, Connecticut, which was super fun. Our friend Brent Montgomery's place, Alex and my friend. So that was cool to see her interact with people. people. I mean, she is a born performer, obviously, but one of the interesting things about her, and hopefully we'll get to talk about it a little bit more, is she grew up in basketball. Her dad was actually the commissioner of the ABA. So she really came to this very naturally. And, you know, she was in sports, then she was not in sports in terms of sportscasting, now has her own production company. So that's very cool. And we've got a couple of team owners coming up and some surprises toward the end of the season.
All right, listen, before you go, got about a minute and a half left. Everybody in the newsroom's talking about their brackets.
Yes.
March Madness underway. Great story on the Bloomberg. Some of the folks that are a part of Brackets for a Cause giving some tips about how they're doing it.
So cool. And one of the funny things, sort of tie it all together, is it's about the people for them and basically who they can deploy. Basically, none of them just sit down with a blank sheet of paper and like, well, do I like Illinois or do I like, you know, Gonzaga?
Nothing casual about this.
Hold on. They recruit people.
Yes.
Oh,
around
yeah.
them to
They
help
assign
them?
analysts. A lot of them have their kids.
I
They're
love
asking
this.
advice. John Gray, who you guys know well, who won just a couple years ago, his ace in the hole, and he's talked about this and he talks about it in this story. His high school teammate, who's now a basketball coach, delivered him the winning bracket 2 years ago. And
That's
so
what I'm saying.
he's an expert.
There's nothing like, oh, let me just do this casually. No, it's like, whoa, let's get the team in here so I win.
This is no joke. I mean, like there's real money on the line. So just, you know, very briefly, we're very excited about this year because record number of participants, 58, and record number of money, almost $1.2 million in the pool, split evenly between the men's bracket and the women's bracket, which is important. The women's tournament, as you know, kicks off tomorrow, and obviously all eyes on Caitlin Clark there. But you know, the men's, it's underway. In fact, I'm going up to a party in just a few minutes here at Bloomberg with Peter Grauer.
Party?
Yeah, come on up.
We'll be here.
I know. You'll be here working, and I'll be upstairs working and watching basketball.
Yeah. Jason working.
I know. Listen, this is a job.
Somebody's got to do it. Jason Kelly, Chief Correspondent, Bloomberg Originals. Check out the deal with Alex Rodriguez and Jason, airing tonight at 9 p.m. Wall Street time on Bloomberg Originals. Catch it Friday, 7 p.m. on Bloomberg TV. This is Bloomberg Business Week.
Now, women on average have about a 30% lower, I guess, amount of money saved up for retirement compared to men.
Yes.
So what are you doing about that?
Yeah, so we launched a campaign called Retire Inequality. And we do know that women retire with 30% less. Women make 83 cents on the dollar. And so there's a couple of things that we're doing. One, it's having this conversation and making sure that we all are aware that there is a gap. By the way, women live longer than men, so longevity risk is a real factor. Secondly, it's about making sure that we are talking to women about what can you do differently. And so whether that's negotiating pay and what are some tools that are out there, making sure that you take the time to negotiate, because we know women do not negotiate as much as men, which puts you at a disadvantage to start. But then also along the way, making sure that women are securing their own retirement, and that as part of their retirement plan, we're having much more conversation around guaranteed income as well. And so ensuring that we understand what are the nuances for women. If you think about COVID, 2 million women exited the workforce. They did not continue to contribute to their 401k or 403b plan. And so how do we make sure, as a matter of policy, as a matter of engagement, that women can have an opportunity to catch up, that women can understand that if you exited the workforce and now you're back, that that's 2 years of compounding that you were not able to take advantage of, and how do we continue to make sure that we're educating them and giving the tools that they need to get back on track.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. The Justice Department and 16 attorneys general are suing Apple, accusing the iPhone maker of violating antitrust laws by blocking rivals from accessing hardware and software features on its popular devices. Now, this suit was filed in New Jersey federal court. It marks the culmination of a 5-year probe into the world's second most valuable tech company. The Biden administration has made competition a cornerstone of its economic policy, with Silicon Valley becoming a key focus. Apple right now down 4.2%. The company, by the way, says the lawsuit is wrong on the facts and the law. Reddit shares rallying. First day of trading, we've got Reddit now at 46.54. Reddit shares up by about 36% after pricing its IPO at $34 a share. Nelson Peltz has received the backing of an influential shareholder advisory firm and a group of business leaders in his bid to join the board of entertainment company Walt Disney. Institutional Shareholder Services, the proxy advisor, says Disney's investors should vote to elect Peltz, the head of activist firm Trian Fund Management, as a director at a shareholder meeting on April 3rd. The move puts ISS at odds with another leading proxy advisor, Glass Lewis. Disney shares, they're up now by 0.7%. Micron Technology, the largest American maker of computer memory chips, posted its biggest gain in more than 12 years after giving a surprisingly strong sales forecast lifted by demand for artificial intelligence hardware. Shares of Micron today, they are surging by 14.7%. Among other chip makers, NVIDIA up by 1%, Intel up by 0.7%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hey, Tim. Israeli Strategic Affairs Minister Ron Dermer will be in Washington, D.C. next week so he can hear concerns from the Biden administration about a potential invasion of Rafah. Now, the argument is that such an invasion would cause many more civilian casualties at a time when there's famine and disease spreading through Gaza. But Dermer told a podcast that, quote, "We're going to go in and finish this job."
It's going to happen, and it will happen even if Israel is forced to fight alone. We're going to fight until the battle won. There's only one possible force that could stop Israel, and that's the Israeli people.
Secretary of State Antony Blinken, meanwhile, in that region, pushing for a deal between Israel and Hamas that would lead to a 6-week ceasefire and an exchange of hostages for Palestinian prisoners, along with a big increase in humanitarian aid to the more than 2 million Palestinians in that coastal strip. Almost $6 billion in student loan debt will be canceled by President Biden for about 78,000 public service workers. The White House says workers, including teachers, nurses, and firefighters, will get the debt relief through the Public Service Loan Forgiveness Program. Those getting the debt relief will receive an email signed by President Biden saying they're on track to get student loan forgiveness in less than a year. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Carol and Tim.
All right, Amy, thank you so much. Really appreciate it. All right, folks, now to our one more thing. Actually, it's going to be, how about two more things if we can squeeze them in this hour? First of all, Reddit shares.
I don't know where you're going with this. I only know about one more thing.
Well, Reddit shares, first of all, jumping as much as 70%. It's first day of trading. It's IPO today. Stock is just below, just about $47 a share. Social media company and its shareholders raising $748 million. Top of the marketed range. Strong signal out of its IPO window.
Yeah, the company had marketed 22 million shares for between $31 and $34 per share, but they did end up IPOing at $34 per share. Reddit has a market value of about $8.2 billion based on the outstanding shares listed in its filings with the SEC. If you include stock options and restricted share units, the fully diluted valuation, Carol, is just shy of about $10 billion.
Yeah, so not too shabby, right?
No.
Go back how many years, right? And there was a valuation funding round, right?
Yeah, they did a funding round in 2021 for $10 billion, or that valued the company at $10 billion. So if they go north of that, it's good news for those investors.
All right, so Reddit, the IPO, is your number one read story on the Bloomberg terminal in the past 60 minutes. The number third most read story on the Bloomberg terminal has to do with Apple. And that stock is off more than 4% as we speak. This as regulators on both sides of the Atlantic are training their eyes on the company, so really unnerving investors with fears over fines and threatening its market dominance.
Yeah, so in the U.S., the Justice Department and 16 attorneys general are suing the company for violating antitrust laws. Also, in Europe, the company is said to be facing probes about whether it's complying with the region's Digital Markets Act. As you mentioned, Carol, shares slid more than 4% today. That pulled about $115 billion in market value, and it brings Apple's year-to-date loss back to 11%.
And just to remind you, earlier this hour, we caught up with our Jen Rhee over at our Bloomberg Intelligence team. She's a senior litigation analyst looking at this case, and she's saying, listen, this is going to be a long case, probably 3 years in the making. Who knows how the market environment changed in terms of what the Justice Department specifically here in the U.S. are filing for and suing for at this point, so things could change. But right now it's got investors a little bit worried, no doubt about it.
Yeah, I wonder how it plays out. Apple in a statement coming out and saying that, hey, this is the Apple ecosystem, this is what we make products for, but it'll be interesting to watch this one over the next few years.
All right, quick check on the markets, folks, as we wrap up this hour of Bloomberg Business Week on radio, TV, YouTube, and Bloomberg Originals. You've got an S&P 500 just up about 18 points, and you've got a NASDAQ 100 up about 0.5%. That's good for a gain of about 90 points. Do not go anywhere. Tim and I continuing on radio, on YouTube, Bloomberg Originals, Bloomberg Business Week on Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Soft landing optimism drives stocks higher. Live from Studio 2 in Bloomberg World Headquarters in New York, I'm Scarlett Fu.
Happy Reddit Day, by the way. I feel like
Is it happy, though?
I don't know. It was happy like an hour ago.
There you go.
Happy 1 hour ago Reddit Day. I'm Alex Steele. We're kicking you off to the closing bell right here in the U.S. Record high, record high, record high. You got the S&P record high. You also have a SocGen upgrading their year-end target to 5,500. That's the biggest bull on the street. And it's the industrial sector that's really leading the way, up by about 1%. Want to track Reddit. It's up 38%. I get that. But if you look at an intraday chart, you can definitely see the fade in the market. And the Bloomberg Dollar Index up by 0.4%. But it's interesting the why. You got the Swissy lower. You have the pound lower. All as you get sort of more dovish conversations over in Europe. The S&P actually cutting rates. That was really interesting earlier in the morning, and all leading to that dollar strength. But Scarlett, it's just record high after record high.
Well, let's continue with what you're saying about Reddit, because it makes its debut finally 2+ years after the social media site began making plans to list on the stock exchange. We see the stock open up 38%. It then climbed to as high as $57.80 compared with the IPO price of $34. And of course, there's an artificial intelligence link. Reddit plans to license data to AI companies to train large language models. Now, speaking of tech, we are seeing a dispersion, I should say, in the sector. Micron leading chip makers higher on demand for AI products, while Apple enters a correction, down 12% since mid-December. The Justice Department and 16 attorneys general sued the iPhone maker for antitrust violations. Now, despite that, the overall stock market is powering higher. Would you say record?
Record.
All right. Well, the S&P 500 headed for its 20th record close this year, thanks in part to data like existing home sales, Alex, that validates the bullish case that the strong economy will keep profits up.
Also, you had those PMIs, and we talked to Chris Williamson on radio, who does the PMI data, and he was saying that, look, we're seeing strength in manufacturing, now coming at the expense of services. So the manufacturing side, the good side picking back up, as services actually wind up slowing. Okay, so this was my point. Record high after record high. White line, S&P. Blue line is the Russell 2000. The S&P equal weighted index is the yellow line. Now, the Russell is not at a record high. It's at the highest level that we've seen since 2022, but it's what we've seen just in the last couple days that really matters. The Russell 2000 is actually now outperforming the equal weighted index as well as the S&P. Just last week, we were really worried about the weakness in the Russell, saying, oh, look, they outperformed in February and then now we're going down again. But can the Russell 2000 really pick up steam? Can the rally broaden out? Can other parts of the market pick up the weight from things like Apple, as you said, Scarlett, in a correction?
Well said, and those are all questions we will pose to Kate Moore, head of thematic strategy over at BlackRock. She joins us now as we kick off the close. Kate, is this really the everything rally, or is it kind of just the everything rally today?
I think people are so tired of the leadership last year that they've come out with this narrative that we need to broaden out the market, that we're going to have an everything rally. But not all of these stocks, not all these stories, not all of these narratives are created equal. And as much as I would like to see every part of the market rise without any pause, I still think we need to be really focused on cash flow generation, on whether or not people have confidence in the business model and the management team. And that's really going to drive, I think, enthusiasm and sentiment over the course of this year. So combined with earnings, which are still going to be a major focus for all fundamental investors.
1.5 million barrels of sour crude for the strategic reserve.
We know that we're on the path to policy easing. I just think the biggest winners are going to be the biggest growers, and we're not just going to broaden out for the sake of rotation.
Is that AI? Is that what you're saying?
It's hard not to love AI, but AI adjacent themes as well. You know, there are a lot of enablers in the software space. Obviously, we've taken a good look at a lot of the data centers and other companies and industries that kind of enable the AI revolution. And of course, we're focusing really hard on those companies that own the data in each of their industries, because they're going to be the winners. So it's not just a couple AI names, but I think it's a broader group of companies that are going to benefit from the significant technological disruption.
What about the big tech names that aren't as intimately involved in AI? And here I'm thinking about names like Apple or even Tesla, which has its own issues with having to cut prices of its vehicles. Is Apple worrisome in terms of the dominance of the Mag 7?
Look, here's what I would say. If you don't have a really compelling idiosyncratic story, which I would suggest Apple and Tesla may not have at this moment, you're not going to get a lot of investor attention. And no one wants to put dollars to work in things that don't have strong revenue growth prospects. And as I was saying, don't have the business models and the management teams that are gaining a lot of confidence. You know, I have to say, incremental money that we're putting to work now are in companies where we think the cash flow is going to continue to accelerate over the course of the year. And I'm not as confident that those are the names, those ones we just talked about, that should gain the investor attention.
What did you make of the DOJ coming after Apple? Like, is that an Apple story, you think, or does all tech need to worry? Like, what do you make of that?
It's a hard question, and I will say Europe usually leads a lot on the regulation side, particularly in technology. Yeah. So we think about kind of the focus on, you know, data privacy. We think about the focus on monopoly or anti-monopolistic behavior. And at this point, I'm not sure. I haven't studied enough the DOJ's commentary to say. What I will note is that whenever companies become dominant in their industry, they do get regulator attention. And Europe in particular, as I said, usually leads the charge there.
Well, Scar, we were talking about before we got on air that, like, at what point do the AI plays get so big that then that draws the attention from DC to them, for example?
That's a good question. Kate, how do you think about that?
Yeah, it is a very good question because, you know, we don't want to be so dependent on a single company. We've seen actually the government, like the U.S. government, do this a couple times. They will say, we're going to award a software license or a contract to a specific company and then realize that creates concentration risk for them. And I think they want to see other companies and other clients kind of do the same thing, which is to say, we're going to diversify across a number of different names. Actually, as an investor, that provides more opportunity. That means you don't just have to bank on the one winner in each parts of the AI vertical, that you can own a couple different names that are all going to be geared in each parts of the vertical.
Is it too early to worry about political disruption from the November election? If there's a new administration coming in, all the things that are in place right now could change on a dime.
Well, a lot of things could change on a dime, Scarlett. You're totally right. And one of the things I worry most about in 2024 is that companies sometimes pull back on their capital expenditure in the second half of the year going into a big presidential election or a big potential change in leadership. But I would say more than just the presidential election, I'm really focused on Congress. Like what happens in the Senate and the House, because those are the composition of those can really move the needle on legislation and on regulation and policy. So there's a lot to watch, and I think it's possible you see a little bit of a pause in enthusiasm as the election season heats up.
What is your strongest conviction right now?
I mean, outside of technology and the AI adjacent things, my strongest conviction is that the U.S. economy is in really good shape. I mean, we were never in the landing camp at all last year. We were kind of outliers in that camp. Maybe Goldman was also sort of in that space as well. But I think there is a good strength across a lot of different parts of the consumer that may be a little under-recognized. And as some of the input costs come down, we're like highly convicted in the disinflationary trends. You know, I think that's going to be good for margins across a whole bunch of the consumer. So I'm looking for opportunities there. We have a modest overweight to consumer discretionary in, you know, specific areas and specific names. But I think that's going to be an area for us to add to risk.
What's the one thing you're worried about that you can't get out of your head, even though the signs are still pretty solid?
The one thing I'm very worried about, actually, is around politics and geopolitics. And as I mentioned, it has an impact on spending decisions. But of course, it's not just the U.S. elections. We have elections all around the world. There's a significant number of geopolitical risks, which may not, over the long term, affect the price direction of the market, but it can affect investment decisions. So I worry about that being a cooling force when everything else looks pretty good. Disinflation, monetary policy easing throughout some part of this year, the consumer in healthy shape, and this awesome shock and discontinuous change from technology. But if everyone gets a little bit worried, and you know, CEOs and CFOs are people too, you know, and it pulls back on spending, that could be an artificial pause to economic growth.
Right, got it. Kate,
I'm looking at it.
Really appreciate your joining us today.
Thanks
Kate
so much
Moore
for
is
having
head of
me.
thematic strategy over at BlackRock, and we love it when she joins us here in studio. All right, coming up, we were talking about this earlier. Shares of Reddit soaring as the social media platform raises almost $750 million. It is one of the most highly anticipated IPOs of the year.
All right, plus you got Nike reporting after the close. We'll get a preview of what to watch and what the numbers might indicate about the health of the global consumer.
And big tech under fire. Alphabet and Apple set to face major investigations by the European Union, while in the U.S., the DOJ hitting Apple with an antitrust suit. We will dig into all of that next. This is The Close on Bloomberg.
Do you think there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well? Or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
It's been our dream to have our users and our communities to be able to be shareholders in Reddit.
everything on Reddit is built by our users and communities. So having them be owners makes a lot of sense. We're so excited about that.
That was Reddit Chief Operating Officer Jen Wong speaking earlier from the New York Stock Exchange. All right, so shares opening 38% above its $34 IPO price and its trading debut. I do want to point out, though, look at the stock and the chart. It has faded a bit. Granted, we're still trading at 49. Bloomberg's Bailey Lipschultz and Bloomberg opinion columnist Dave Lee join us now. All right, Bailey, your take. Was this a success?
It was a roaring success, and I think it was a surprising success.
Do we care that it's fading now, though?
Maybe. I don't know. I think that the interesting thing is when you look at the value traded, so it's north of $2 billion of value. It's already traded the float 1.5 times. More volume, more value traded than Astera Labs had yesterday, which has since doubled from its IPO price. So it does seem like the animal spirits are maybe not back in full force, but it does seem like investor enthusiasm and excitement is percolated.
All right, Dave, what say you? Success?
Yes, I agree with Bailey. I think a success today, but I think, ultimately we're going to see whether Reddit's IPO is successful, not today, but long into the future when it starts to answer some of those questions about its advertising model and whether it can sell enough data to turn around its losses at the moment. But as far as a first day goes, yes, I think everyone at Reddit is going to be very, very pleased with what's happened.
Everyone at Reddit. So who's everyone at Reddit? Because you could say it's management and the company, or you could say it's the community. And one thing you point out, Dave, in one of your recent columns is that one of the risk factors that Reddit included in its prospectus was its user base, that they're kind of fickle and they can turn on the company.
Yes, I had to laugh when those risk factors were first published. They were enormous, hundreds and hundreds of words, much longer than risk factors from Facebook and from Twitter when they went public. And that's because Reddit is a unique social network. It relies very much on volunteers to moderate its content. There's 60,000 volunteer moderators that help run Reddit's sites. But also it has users that can band together against the site or against the stock, as we saw from the Wall Street Bets fiasco involving GameStop and other meme stocks as they become known. So this is a really interesting case of where a user base has such control potentially over the success of Reddit long term. Yeah. And I have to say, there seems to be a lot of apprehension among not just moderators, but most users on Reddit wondering, how will the stress of being on Wall Street change the nature of this company and how it has to make money?
Bailey, this is really meta that Reddit users are on Reddit talking about this, wondering about this, and maybe even discussing whether they should short the stock.
Well, that was the popular take, Scarlett, initially when the S1 flipped was like, oh, we can't wait to short it. We hate it. I talked to a pair of mods who managed the Wall Street Bets account, and they both kind of shrugged it off and said their vocal trend is to be critical of the company. That's in vogue. That's how you get upvotes. You don't get upvotes and good karma from other users by being pro Reddit. And that's really one of the interesting things and kind of has been something we've been tracking since the meme stock mania of 21.
Do we know if the Reddit users are buying the stock today?
We know that they got an 8% allocation, so 8% of the shares were allocated to moderators and users with so-called high karma scores, which means you're just very active and get those upvotes. We will be interesting to see how some of the data points come out. Fidelity is one of those that publishes some of their daily trading volumes from their retail clients. But when you're the top-ranked ticker mentioned on StockTwits, on Reddit itself, on Wall Street Bets, that does seem to indicate that there is some appetite.
Hey, Dave, do you get the feel, you mentioned profitability, right? They have to deliver on that. Do they, though? Like, if it's going to be a third derivative AI play with their data, basically, do they need to be profitable at that point?
I mean, look, if this is a company going public at the same time as the other social networks did, then profitability wasn't as much of a concern as I think it is now. I think the company hasn't made money. It made a loss of, I believe, $91 million last year. I think investors do want to see profitability, even on these new JVs, perhaps more soon than they did in the past. Obviously, companies like Uber were able to go losing money for a long time. That doesn't seem to be the state of play now. And I think where Reddit has these big question marks over is sort of questioning how valuable its data might be, because you have a company here that has reams and reams of conversations, of links, of people talking in natural language, which is very valuable. But whether it can monetize that to the degree that investors might want is going to be tricky. And can it do that in a way that doesn't upset the users that, as we've discussed, can be pretty volatile at times.
Yeah, those large language models will learn a lot of acronyms for sure. Bloomberg's Dave Lee and Billy Lifschultz joining us for a roundtable on Reddit. I don't know about you, but when I look at Reddit, it feels like it's very much a relic of the early 2000s. It doesn't look like a social media site that you use in 2024.
Well, I mean, it was from 18 years ago.
I know. The design, though,
So
I'm just saying it hasn't been updated, you know?
But I don't know. The users don't seem to care. I mean, they have so much engagement at that point, too. I just wonder what is our takeaway from this week in terms of Astera and then Reddit, right? Like, is IPO market open? Are we ready? Or is it a bubble? Or were these one-offs? Or is it all still some kind of AI derivative play?
It's an AI derivative play. Astera is definitely an AI. It's not
That's
derivative.
for sure. That is it.
Right,
yeah.
That is it. This is AI derivative for now. We'll see how far they get with this. You know, this is a story we'll figure out in about 6 months or 6 years. Coming up, Nike at risk of losing fans on Wall Street. We've got more on the pressure facing the retailer's earnings release after the bell in today's Top Calls. This is The Close.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but you know, it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, you know, movie-going begets movie-going, right? So when there's a season filled with, you know, good movies that people want to see, you know, I was made to feel pretty optimistic about what we saw in the summer.
Time now for our top calls, a look at some of the big analyst movers on the back of analyst recommendations. There we go. We're going to start with Adobe, the software company getting a rare sell equivalent rating from analysts at KeyBank. The price target set to $445 as the firm starts coverage of the sector. You have the analyst there saying Adobe will be pressured by competition in Gen AI and slower growth in its Creative Cloud suite. While the launch of its Firefly add-on helps shave off some of those threats, the onslaught of text-to-image and video products being released may prove too overwhelming in the end for Adobe. The shares down by 1 3/4%. Next up, Paramount raised to neutral from sell at Rosenblatt Securities. This after a Bloomberg report that Apollo Global offered to buy Paramount's Hollywood studio for about $11 billion. The analyst says the best value for most and potentially all entertainment conglomerates is to break up sooner rather than later. The shares down about 5%. And finally, Revolve. Cowen upgrading the fashion retailer to outperform from market perform. Analyst Oliver Chen says now is the time to buy into a leading Gen Z platform. He expects the company to see margin expansion and a return to sales growth in the second quarter after a year of markdowns and broad-based softness. The stock currently up 0.8%. And those are some of our top calls. Now, staying with retail, Nike is set to release its third quarter report in about an hour's time, and one big area of focus for investors is the brand's performance in North America and China. Joining us now for a preview is Zach Waring, equity analyst at CFRA. He's got a sell rating on the stock. So, Zach, when it comes to Nike, yes, the performance domestically, yes, the performance in China, and the cost cuts are of huge concern. Is there a growth story here for Nike in the short term?
Yeah, thanks for having me. So, I mean, that's what we're looking for. You know, we're waiting for management to tell us where their next leg of growth is going to come from because, you know, it's been kind of stale over the past 2 or 3 years. China hasn't really turned out how they liked it and how analysts want it to turn out. You know, they haven't seen sales, you know, recover to 2021 levels yet. And so, you know, it's what we're looking for management. We think analyst expectations for next year are a little bit high at $4.20 an EPS in fiscal 25. So, yeah, I mean, it's going to come down to what management thinks is the next leg for them.
So, Zachary, Andrea Felstead is a Bloomberg opinion columnist, and she had a great piece out that talked about Adidas versus Nike and how Adidas is kind of getting wise to how they should be running things, right? You don't need the next hot thing. You need a consistent product, which is what like a Lululemon has, for example, or even Dick's Sporting Goods. Do you feel like Nike is going to do that?
Yeah, so, you know, we're actually a little bit worried about their competition. You've seen some of these newer sneaker brands, Hoka and On, kind of take over and seen really significant growth and market share gain over the past year or two. And we think that's going to continue. And I think Nike's been a little bit complacent. And, you know, Adidas is, you know, another mature brand that's been around for a really long time. They're global. And they're starting to see some competitors come, you know, out of the woodwork. So, I don't think that's really a good play moving forward. You know, you're seeing this competition. Adidas obviously is global, and they've saturated a couple of their markets like Europe and U.S. So, yeah, I mean, I think that's probably not the way to play it moving forward.
Well, Nike did beat out Adidas in terms of sponsoring the German national soccer team, so there is that where it's expanding in Europe. You mentioned in your note that the Jordan brand is doing really well for Nike. Can you explain a little bit more about how the Jordan brand works? I know that the movie Air came out and that got everyone all excited and kind of reminiscent on Michael Jordan, but what are the growth prospects of a brand featuring a player that's not in the NBA?
Yeah, it's his legacy brand. Obviously, Michael Jordan, one of the greatest basketball players of all time. They came out with that movie last year, and they saw a sales boost from it. You know, I think it's more of they're stealing from themselves in terms of market share there in the U.S. So they're going to look outside of the U.S. for the Jordan brand to grow. You know, the Nike brand has saturated the U.S. market across the board in terms of running shoes and basketball shoes. And so, you know, the Jordan brand grows, but it's taken market share from itself, from its other basketball shoes. And so you're gonna really have to look outside of the U.S. for that brand to grow more, which they've done, and they've done a good job over the past few quarters. So, yeah, I mean, we think it's got to come from somewhere else from Nike, and we're just not sure where that's going to be. So that's kind of where our call is coming from.
Before we let you go, what would be a good considering all of this backdrop? What would be a good operating margin that they were able to manage their wages and their promotions, etc.?
Yeah, so we think this quarter is going to be pretty strong. We don't think, you know, they're going to miss by any means. Analysts have brought their expectations down pretty drastically, and actually they think EPS is going to shrink year over year. So, you know, we think they're seeing a lot of tailwinds from freight like other retailers, and less promotional activity. So, you know, we think 13%. Plus, it's probably a good number here in terms of operating margin, and we think they'll achieve that. You know, they usually do a pretty good job of leading investors and analysts lower and then beating. So, you know, we're not really worried about the quarter. We think it's more in terms of growth outlook for the next 12 months.
Yeah, and that stock down, almost 18% since that high in December. All right, Zachary, thanks a lot. Zachary Waring over at CFRA joining us there. I feel like you're a Nike person.
You know, I've been looking at high top sneakers, and there are a lot of women wearing the Jordan high tops, and I don't know whether I want to dip my toe into that and spend that kind of money, but you know, The colors are kind of nice.
So her answer to me was yes.
No,
Yes,
it's a very
she is.
nuanced answer.
Yes, she
Nuanced
is.
answer.
All right, fair enough. All right, coming up, we're going to talk to Jill Castilla, President and CEO of Citizens Bank of Edmond. This is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg.
It's just about 3:30 p.m. in New York. This is the countdown to the close. I'm Scarlett Fu.
And I'm Alex Steele. So I just want to take us back to the PMI that I mentioned earlier. So manufacturing actually is doing better. And Chris Williamson of S&P Global was saying that the economy, the numbers are looking at a 2% economy. That's super solid. And that manufacturing is actually doing a bit better at the expense of services, which is kind of what we wanted to see anyway, but prices continue to rise.
Yeah, that's the tricky part, right? Yep. Because, you want to see the economy doing well, but you want to continue to see that disinflation. And, Jay Powell had warned there'd be bumps in the road. This is yet another bump in the road.
Nevertheless, I mentioned earlier, the industrials best performing sector within the S&P, financials best performing sector in the S&P also over the past month. Third best performing stocks so far this year. Like the big banks are still doing really well, which says a lot about growth. The road, though, for regional banks, speaking of bumpy, could be bumpy this year. The KBW Regional Banking Index is down more than 8%. And the FDIC is proposing some new rules that could make bank mergers even tougher. We kind of been waiting for that to be a trigger and a catalyst for regional banks, maybe that just got harder. So the rules would take financial stability into account, along with the effect on communities and the impact on competition, adding layers of scrutiny to the merger process. It would be for a bank that would be combined with more than $100 billion in assets. Well, joining us now for more perspective and her take on the economy is Jill Castilla, President and CEO of Citizens Bank of Edmond. It's a community bank located in Edmond, Oklahoma, and it's one of only 14 women-led banks in the U.S. Thank you for joining us, Jill. We really appreciate it.
It's great to be here. Thank you.
So I just get confused about the overall regional banks. On the one hand, I feel like, oh, there's too many. You guys all got to consolidate. On the other hand, the FDIC is like, nah, maybe not so much. We're going to look at it closer scrutiny of it. What do you think?
Yeah, it's interesting. We're a small bank, so 4,000 banks are kind of like us, where they're under $1 billion. And this is really focused on those large regionals. And they run into a lot of issues when you start stretching out that M&A activity and the approval process, cybersecurity issues, retaining talent. I don't think that's not very good for the economy or nor for the financial stability. So yeah, I think this information we got today from the FDIC, I don't know what the unintended consequences are going to be, so it'll be interesting as it's all kind of vetted out.
It's like a flashing yellow light as opposed to red light or green light, right? So people say that the U.S. is overbanked, and yes, it's usually in the context of those regional banks. When it comes to the community banks, the smaller banks, do you get the sense that the U.S. is overbanked?
I mean, when you look at it, when you look at my suburb, there's 60 different banks. And so it looks like from outside, like, wow, this is a lot of banks in one place. But our small community bank, which is one of the smallest in the area, 122 years old, serves those that don't necessarily fit in at a Bank of America or a larger regional bank. So small business owners that need a lot of time. I'll spend 3 years with someone to get them bankable. And that just isn't going to occur at a larger institution where you have less maybe like physical kind of investment in the community.
A 3-year investment in talking with them?
So how does that work? So I come to you and I'm like, hey, I want to expand a yoga business, or I want to build a yoga business. And you're like, yes, this is how we can help you do that.
Well, so it might be like, I want to open a restaurant. That's my dream. I'm a great cook. I want to open a restaurant. And then we'll start talking about what are the stages? What does your credit look like? Oh, you have some credit repair. What are some steps we can take to get you where you're credit worthy enough to be?
You're like a financial advisor almost.
Well, you're supposed to, like, bankers have always been kind of these partners where you're like a trusted resource, that you're a steward and you're helping someone really achieve generational success. And so it might be opening that food truck. Maybe that's the first loan rather than getting a huge restaurant. Let's test the market and see what that looks like. And you're really guiding someone to success, and it's incredibly rewarding.
I can imagine that. What are you noticing now? Like, what are some of your clients or prospective clients coming to you and talking to you about?
Yeah, it's starting to normalize. Before, there was just so much money. There was a lot of government assistance related to COVID. And so you didn't have to be as disciplined in your business plan to get something kind of off the ground. And now we're kind of back to those times where we do see having some business there, having some vulnerabilities, but it's more normal type of vulnerabilities. And so we're helping them through those types of issues. But it's still so incredibly positive. We finished the year with 0 past dues, 0 non-accruals, 0 classified loans. That hasn't happened in my 20-plus year career.
Well, you have the ability to really vet your customer base in a way that perhaps the regionals and the bigger banks don't. I'm curious about interest rates, because obviously we know a lot of people are stocking away money in their savings accounts, enjoying the high yields that they're currently getting. The Federal Reserve has indicated its next move will be a rate cut. Once that happens, how long before banks like yours start to cut the rates that you offer on deposits?
Well, I think you'll see, it just depends really on deposit competition. In some areas of the country, deposit competition is very robust. It is in Oklahoma City.
Okay.
In rural communities, it may be a little bit less than that. So it all depends on what the composition is, because in some areas, you might be able to reduce rates more quickly. We have a really loyal customer base, and so they may be more receptive to that and have less interest rate sensitivity.
So I feel like Silicon Valley Bank, for example, would also have said that they had a very robust and loyal deposit base, which did not pan out. Why are you different? Like, why is a bank like yours actually different? Have you seen any deposit changes?
So they had over 90% uninsured deposits. I have less than 5% uninsured deposits.
Oh, okay. Well,
my median account balance is $12,000 versus millions of dollars. So depositor concentration matters a lot. 120 years of banking multi-generational families yields a lot of stability. So you're not dependent upon one or two customers or 100 customers, where we've got 20,000 customers in our $350 million bank, which is far more, I would suspect, than what SVB had.
We started our conversation with the FDIC and the government taking steps to kind of get mergers going, or in this case, putting up obstacles to mergers. What is your biggest concern when it comes to the government moves that address the banking sector?
Whenever we increase regulation, it always results in unintended consequences. And for a small community bank, you would think I would have really no dog in the hunt for a $100 billion bank merger and acquisition policy. But it all rolls down to me at some point in time. And so it always makes increased regulation throughout the entire industry whenever we were focusing on large banks. More regulation ends up consequently hurting small businesses and mortgages for Americans trying to buy a home. So if you're increasing the rigor here, it always, because the financing for a lot of those activities happens at those larger institutions, it's a really healthy ecosystem when it works properly. But when you start having a lot of regulation coming down more quickly and not very mindfully, it can cause us unintended consequences that can be severe.
Jill, we love talking to you. That was totally fascinating. Thank you so much. Jill Castilla is President and CEO of Citizens Bank of Edmond. So interesting.
3 years.
I just can't imagine like that ever happening in like, I don't know, maybe it does, but like walking into a main big bank in
Chase or Bank of America are not talking to me for 3 years.
I mean, maybe in certain areas, but I don't want to discount it altogether. But that's quite interesting. It's sort of like a longer term investment in that way. And I have a friend who's a small business owner, and she's trying to come up with some kind of plan to expand, but then she needs a way to like bridge that, right? She needs a way to get to expansion to profitability, and she's like doing it on her own spreadsheet, you know?
Yeah. Well, maybe she needs to find a community bank. That's the lesson here.
In Ditmas. All right, coming up, it left unchallenged. If left unchallenged, Apple's monopoly, like power in the, I don't know how to read that tease. Apple in the hot seat, the DOJ coming after Apple. We'll break it down. This is Bloomberg.
That was good.
Top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we can start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
We allege that Apple has employed a strategy that relies on exclusionary, anti-competitive conduct that hurts both consumers and developers. For consumers, that has meant fewer choices, higher prices and fees, lower quality smartphones, apps, and accessories, and less innovation from Apple and its competitors.
That was Attorney General Merrick Garland speaking earlier about the DOJ suit against Apple, basically accusing the iPhone maker of monopolizing the smartphone market. Apple also facing antitrust allegations in other markets like Europe. If you look at the shares, they are currently down right now, $7.72 at 170 and change. And in fact, since mid-December, its most recent high, it's now lost 13%, putting it in correction mode. Joining us now for more in our Stock of the Hour is Jennifer Rhee. She's Senior Litigation Analyst for Bloomberg Opinion. Intelligence, pardon me. Jennifer, it's been several years since it became public knowledge that the DOJ was looking into Apple, and we have long heard speculation that there was going to be some kind of suit. Why now?
Well, you know, we knew a few years ago that the DOJ had opened investigations into Google and Apple. And I think really what happened here is that it just focused on Google first. I mean, we know right now there are 2 pending DOJ monopolization suits against Google. It takes a lot of time and resources to develop those suits and bring those suits and then litigate them. And I think they really did want to eventually get to Apple. And I think that they needed to do it now because obviously we have an election coming up and it's possible there could be an administration change. And the enforcers, the decision makers could be changed. So if they wanted to get this suit in, now was the time to do it.
What do you think the result of this is going to be, Jen? Because I really struggle with the why behind it. Because many people would be like, hey, I like it the way it is. It's easier. It's one-stop shop. What's the problem?
And that's what Apple's defense will be, at least part of it. You know, Alex, it's so hard to say because here's the thing with monopolization suits. It's all about the conduct, and the conduct the company engages in is only illegal if it's deemed to weigh more harmful than beneficial, right? So first thing the DOJ has to do is show that this conduct has caused harm. But the next thing is Apple can defend it by saying, look, this conduct might have caused a little bit of harm, but we have pro-competitive, legitimate business justifications for our conduct. And I actually think they have some good ones, by the way. And those outweigh this minimal harm that you're talking about, DOJ. And when that happens, you lose. And I think that's why it's so hard to say, because all of that depends on the facts and depends on the evidence. It depends on what's in the documents. And when Apple, let's say, engaged in certain policies and conduct and rules that the DOJ is talking about, what was the intent behind those and why did they?
Right. So it's in the eye of the beholder, certainly. Jen, what kind of remedies are the DOJ and the states seeking?
Well, you know, not structural. They haven't been literal about that like they have been in the complaints against Google, where they specifically say they're seeking an injunction.
According to a spokesperson, the US on Friday morning will bring a resolution calling for an immediate ceasefire in Gaza as part of a hostage deal for a vote in the UN Security Council.
Hardware works with non-Apple smartphones, and the Apple smartphones work with non-Apple hardware. Let's say the Apple Watch, for instance, or other fitness watches working better with Apple with an iOS. And they're saying that these things, Apple restricts all this now because they want to lock users into the iOS, make it harder for them to switch, and maintain their monopolies, which allows them to charge very high fees.
Jen, thanks so much. You are one-stop shop when it comes to anything antitrust. Really appreciate it. Jen Rhee of Bloomberg Intelligence. What I find interesting is she's talking about harming, right? But harm who? Is it the consumers or is it
Well, if you're an app developer, it might hurt you because Apple charges that hefty toll of 30% commission on everything. Epic Games, the maker of Fortnite, would allege that that was harmful. For you and me, I don't think it matters all that much, unless you're an app developer in your spare time.
I 100% am not. But I also wonder, too, then does it hurt their ability to become like a services company, which is what they keep saying they want to do because their margins are so good? If that margin shrinks, then they just really have to rely on being a hardware company, and does that come with problems?
It probably does.
Hence the stock price down 13% in just a couple months. All right, coming up, we're going to continue to count you down to the closing bells with Corinne Pai, head of portfolio management over at Fiduciary Trust International. This is The Close on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, now weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Markets on close imbalance, 1.5 billion to the buy side.
This is the countdown to the close. I'm Scarlett Fu here with Alex Steele. Record high, record high, record high.
That's literally the board I was going to show you. S&P record high. S&P equal weighted record high. The NASDAQ 100 record high. Russell 2000 not at a record high, but it's still at the highest level we've seen since 2022. We were talking about earlier that, I feel like on last Thursday, it was like, oh man, the small caps did not break out. It's over now. We're just going to go back to big tech, and look at that. Now we're seeing them outperform.
We have to take it on a day-by-day basis. And for today, there is a breakout. There is a broadening of the advance. Well, as we mentioned, the S&P 500 set another record close, or is on course for a record close today. We spoke earlier with Kate Moore of BlackRock, and she gave us her view on just how far this advance can go.
I think people are so tired of the leadership last year that they've come out with this narrative that we need to broaden out the market, that we're going to have an everything rally. But not all of these stocks, not all these stories, not all of these narratives are created equal. And as much as I would like to see every part of the market rise without any pause, I still think we need to be really focused on cash flow generation, on whether or not people have confidence in the business model and the management team. And that's really going to drive, I think, enthusiasm and sentiment over the course of this year. I just think the biggest winners are going to be the biggest growers. And we're not just going to broaden out for the sake of rotation.
For more market analysis, let's bring in now Karen Pei. She is Executive Vice President and Head of Portfolio Management over at Fiduciary Trust International. So we're not going to broaden out for the sake of rotation. Would you agree with that?
I would agree. I think to a certain extent. I do think that, rotations occur in markets based on certain drivers, coming from either bottoms up or top down perspective, right? So if there's a change in dynamic in terms of interest rate expectations or economic growth expectations, I think that will probably determine kind of what type of rotation we'll see.
I mean, and Kate's point also is like, you still have to love tech. Like you can't not love AI. You can't not love tech. Do you? And did we learn anything this week from the IPOs?
Sure. I think it's topic du jour, right? So we do believe in technology. We do believe in owning growth stocks. And if you look at the technology companies, they're the ones that are really generating a lot of the growth behind the S&P 500. But as we were talking about, or as you were talking about earlier, the broadening out in the market, I think that's very positive to see. I think we need that to sustain a market rally. And I think, certainly a market that participates from a catch-up of the rest of the market is better than a market that, sort of consolidates based on a correction from, some of the winners, right? So I do think that, this is a market where earnings growth will be rewarded, but I also believe that it's a good time for investors to really pay attention to valuation and shift into, some income-generating strategies.
So Alex followed up with that question about IPOs. I just want to throw that to you now. We have Reddit, of course, making its trading debut today. Yes. Sarah, of course, went public yesterday. Both of them have a link to AI, one more tangential than the other. Are these issuances, do they tell us anything about risk appetite right now? Or are they just, because of AI, they're going to be received well?
I think we are in a risk-on market. I think risk appetite is fairly high. So, seeing the strong performance of Reddit certainly speaks to a favorable environment for IPOs. This also coming off the back of the Fed's comments about, keeping interest rates easy. I think that's also conducive to riskier assets. I do think that in terms of AI and participation, I think we really have to be careful and determine which companies are true beneficiaries versus which ones are hype. So I think everyone loves to kind of bring in the word artificial intelligence or AI, whether they're talking about their business models or whether they're talking about their earnings reports. And, we see that stocks are driven to sort of extraordinary levels just by mere mention. So I think we do have to decipher hype versus companies that can actually deliver on a true business model substantiated by AI revenue.
You mentioned, in addition to income-generating strategies, does that mean dividend players? Does that mean treasuries? Does it mean the credit market? What does that mean for you?
Yeah, actually, I would say all of the above. I think that it's a good time for investors to kind of start first from an asset allocation perspective and rebalance. I think that's always a good thing to do in this type of environment when valuations on equities are really, kind of at the richer end. So I think, first of all, I think it is a pretty decent environment for investing in fixed income where there is decent yield. And in addition to that, I do think that this is a good time to shift into income-oriented equities, right? So growth can come from earnings growth, revenue growth, or cash flow growth. And I do think that it's important to kind of look at your portfolio and make sure that there's diversification.
What sectors would those be?
So I do think that there are some good stocks within healthcare and also consumer staples companies. I think that those are two areas where you have some pretty good valuations. But even within technology, there are stocks that are generating income and dividend yield and have dividend growth. So I think that it's definitely a market where it pays attention to be selective.
Just to end on the animal spirit part, like, it's definitely risk on. Should the market be this risk on? And like, what would be a sell signal? I'm always skeptical. I'm the kind of person that puts like soup cans and like gold under my bed. I don't actually do that, but like I would if I could. Like, what is going to make me feel better about this rally?
Yes, I think that's a great question. It's a tough market to be in. I really do think that it is a market that sort of keeps us up at night because we've seen some parabolic moves, right, in a short period of time. And, I think that there are some relatively high expectations. So, I think some of the signs that I would, definitely look to are signs from, I think we have to start with the fundamentals. What's the path of the economy? What's the path of interest rates? I think that if there is a gap between market expectations for rate cuts versus the reality, I think consensus right now has 3 rate cuts, sort of priced in. If we don't get that,
The EU leaders agreed to open accession negotiations with Bosnia.
That could be a risk. And I think, if earnings disappoint, because earnings expectations right now for this year are 11%, right?
Yeah.
If there's some disappointment on that front, that could also be a cause for volatility.
All right, Karen Pei, thank you so much. Karen is Executive Vice President and Head of Portfolio Management over at Fiduciary Trust International. I keep thinking about that $6 trillion wall of money that's sitting there that could be put into the market. It hasn't been so far, and as long as stocks keep rising, there's no real incentive to keep chasing prices.
And it does beg the question, does it belong anywhere? Or is that just what we would have seen in bank deposits? And they're just in money markets, and that's just the difference? So they're not actually going to be invested anywhere.
Yeah, people are comfortable with them sitting there.
Yeah.
All right, we're moving closer to the closing bell. Full market coverage begins right here on Bloomberg as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're about 2 minutes away from the end of the trading day. Scarlett Fu and Alex Steele with you, counting you down to the closing bell. And we're bringing in our colleagues from radio right now, Carol Massar and Tim Stenovic, saying hello to everyone across Bloomberg Television, Bloomberg Radio, and our YouTube audiences. Soft landing hopes spring eternal, Carol.
Well said, well said. I keep looking and I'm thinking, what? Record on the S&P, could be a record on the NASDAQ 100. We have 2 tech IPOs, one yesterday. It's continuing to gain today. Of course, the Reddit IPO up almost 50% as we speak. I'm like, wait, is this 1999? What time is this? It just feels like we were just talking with a guest who kind of was throwing water on the fire and saying, wait, slow down a little bit. It takes a while for all that Fed interest rate increases to kind of kick in, and we're getting to that environment.
That was Cheryl Smith. She's over at Trillium Asset Management. She's economist and portfolio manager, Alex, and she is a little concerned right now. She says we're 4 to 6 months away from a recession. She's starting to see softness when it comes to many of the state employee figures. Credit card delinquencies are, are going up. And she says it's always like this just before there's a recession. And it's a really contrarian view that we're hearing right now from her, because it goes against everything that we've heard from so many other participants and market watchers.
Which it just feels like then we're just in a bifurcated sort of world, right? That if you have your money invested in money market accounts, like Scarlett and I were just talking about, you're making a nice return. Maybe you're doing okay. If you're in the equity market, you're doing okay. But I think Larry Summers and had a paper out with some colleagues that talked about the fact if you factor in debt in addition to mortgage payments and debt payments, you're actually looking at a lot more stress on the market and individuals than would be implied by just straight up inflationary numbers. All right, there are the closing bells. I think we're at a record. I'm trying to do this real fast, but it seems like we're at a record for the S&P, right? And we're at a record for the equal weighted index as well. The NASDAQ 100 at a record. Here we go, guys, though, record after record.
Yeah, exactly, right? It just makes you look. We're looking at what, about a 27% jump in the S&P 500 since that late October level. So we have seen quite a run up. S&P 500, folks, let me just dig a little bit deeper. We've got 379 names to the upside, so a lot of names gaining in today's session. 123 to the downside, Scarlett, and 1 unchanged.
And a very broad advance as well. You look at the IMAP, which of course
Canada's S&P TSX Composite Index rises 0.2%, hit a record high.
Those are your best performers, but you've got 9 out of 11 groups in the green. The laggards here are utilities and communication services, but industrials take the lead here, up almost 1% on the day.
All right, guys, let me get to some of the individual gainers, if I may. Micron on that list, closing at a record high today, up 14% here. Largest U.S. maker of computer memory chips, soaring today. We know we broke it down yesterday after the close when it gave its quarterly update and outlook. It gave a surprisingly strong revenue forecast for the current quarter, buoyed by demand for artificial intelligence hardware. So this one, definitely an outperformer.
You called it, Carol. You called it yesterday.
Do you know I actually? Yeah.
Apple closes down 4.1% for the biggest drop since August.
Even open this morning, she told me. That's a little secret to Carol Massar.
But it worked.
It worked. All right. So Reddit is on my gainer list today. Of course, we've all been talking about it. IPO today at its highs, up as much as 70%, finishing the day with about a 48% gain, $50.44 a share. Remember, it IPO'd, at 34 a share, which was the high end of the range and popping in a big way today. I wanted to check just real quickly what the market valuation, market cap, over $8 billion, according to the Bloomberg terminal. And then let's go to the IPO yesterday, talking about Astera Labs. This one, which gained over 70% yesterday, soaring again in today's session, up about 3%. Actually, it was up much more earlier in the day. So, yeah, a little bit of a pop, but nonetheless, gaining again for a second day. Semiconductor connectivity company geared to enabling what is called mainstreaming of AI and machine learning in the cloud. So nonetheless, that one continuing to gain ground in its second day of trading as a publicly held company.
Okay, so Carol does the gainers before the market even opens.
I had the easy.
I'm at 355, frantically finding the companies that actually moved lower. There were a few actually prominent ones. We got to start with Apple because shares of the company fell more than 4%. It's actually its biggest drop going all the way back to August. Raised about $114 billion in market cap today. Year to date, Apple shares are down 11%. Regulators on both sides of the Atlantic are taking a look at Apple right now, and that's got investors worried. Here in the U.S., the Justice Department and 16 attorneys general are suing Apple for violating antitrust laws. We spoke to Jen Rhee over at Bloomberg Intelligence, who said this could be a years-long process. In Europe, the company is said to be facing probes about whether it's complying with the Digital Markets Act. So some regulatory concerns on both sides of the Atlantic for Apple. Shares down 4.13% today. And now check out what Accenture said about IT spend this year.